I was in law school, dropped out, like got a job, and it was like a startup. I was the first wave of 40 reps hired. We got a equity piece in the company. The company did really well. We had this equity piece that I didn't know about. And, a year into it, year and a half, like the company had like this big milestone. They crossed $1 billion market cap. And
welcome back, everybody, to Be the Trader. Today, I have a very special guest. And you know what's unique about this, yes, is a lot of you guys and gals have been saying, you've been really focused on the short side. And lately, we've been getting a lot more long bias traders. And today, I have a very special long bias trader who's a position trader and who also positions himself very well in GameStop, buying it in I think it was the sixes before it ran, which is just wild. Could you imagine? And he sized in the way he would want to do it because he didn't know it was going to go up that high. But I have for you Paso, aka I believe it's P Milok, right?
P Millie.
And that's my fault, on Twitter. So if you don't know him by Paso, you know him by P Millie on Twitter. And if you don't know that, then you need to go follow him now because he usually tweets a little bit about, what he's thinking and so forth. Yeah. So welcome to the show, Paso. Thanks for
being here. Happy to be
here,
man. Thank you for having me.
Absolutely, dude. When I found out that you bought GameStop at like $6, I was like, this guy's a joke. No way. I was like, there's no way you bought that $6. First off, we'll get into your background, but I had to jump on this right away before we get into that. Walk me through that.
So correction, I was buying GameStop in the 4s, but I was buying that into 6. So as a position trader, a long swing trader, my process is based on finding names beaten down, near 52-week lows. I typically look for just like a simple scan, 50, 60, 70, up to 100% divergence from the 200-day moving average. So you're talking like extremely beaten down names, and GameStop just happened to be on the scan. And what's interesting about GameStop is once it came up, if you look at the chart and you see how long it held in that 4 level, I mean, it was like months, May, June, July. It had a base of about $4 for months. And even back then, the short percentage was like 70, 80. It kept ramping up like 90, even in the 5s up to $6. The short float was still about 90, 96%. So I'm thinking to myself, well, if the short float is this high and they haven't been able to break it down, it typically that's to me a clear sign it's going to go the other way. Now it had the initial move. I sold some, it came back, and I added again. So I was adding around 6 when it had an ER miss, and then it dipped to about 650. So I added back what I sold, and then just kind of trended back up slowly. And then after that, the Ryan Cohen news came in, and that just shot it up, and it just it ran in the 20s and came like just under 20. It came back. I added again. So yeah, man, it was just one of those. I mean, back then, there's no way. I mean, no matter what anybody says, it's like a total black swan event. Nobody could have foreseen it coming. And when it started to pick up, it broke 20, and I'd sized in pretty well. And it broke 20 that day. It was like 22, and it just went to 30, 35. And honestly, like the majority of my position, I was done like in the mid to high 30s, and then it never looked back. And it's funny to think about, like seeing where it went after, and like me not having barely any size left. But at the end of the day, like those moves, those major moves, like you give back so much. And I was up like 500-600%, so I just wasn't willing to risk giving any money back. Unfortunately, I did what I always tell you guys to do, is stop trading your P&L. And I'm always, I'm looking at like what the chart is like, it's telling me, where do I think it's going to go? And I just happened to look, and, the money just kind of took a grasp of me. I'm like, you know what? I'm not giving any of this back. And when I think about it now that it's all said and done, it would have been really hard for me to hold even up to 100, given the size I had, given the move. I mean, yeah, it went 3, 4, 5, and here we are. It's climbing back into threes, but I mean, you're so tunnel visioned when you're in the trade. You look at the P&L on the chart, and it's so hard to look at everything else. But now, like I said, when it's all said and done, yeah, I missed out on maybe another 50, 60%, but there's just no way to hold. And the guys that made it up to 300, they were probably buying the 40s and 50s. So I walked away clean. I took a couple weeks off just to kind of like recoup, because even after a big loss or a big win, you want to like mentally like kind of gather yourself and you're not overconfident jumping into the next play. But yeah, it's crazy to think about. But I actually, I do a fair amount of fundamental analysis too with my plays. So as I'm positioning myself, with decent size, like I need to make sure that this isn't like a JCPenney or a Sears or a Hertz. GameStop, had 500-600 million in cash. They do $5-6 billion in revenue a year. Like they might have had another couple of years left, or as people call a cigar butt trade left. But the fact that people are calling for bankruptcy, I mean, I just didn't see it. And when you align the technicals with the fundamentals, for me, that the short float and whatever was happening with the share structure was just, the gasoline to this flame that was getting ignited. And, Cohen stepped in, and, Hedgeye came in with their top pick of was it 2020 or 2021? And I mean, it just, man, what a move. But it's crazy to see, like being involved so early and then seeing what it did after. But
that's amazing, dude. Yeah. What's cool is you said a couple of things, and that is the idea about even when a big win or a big loss, how you might want to take a step back. Can you explain why that's important?
I've, in my career early on, after a big win, the next day, I mean, I would do a good job of like knowing the dollar amount behind it and just kind of voiding that out, whether, it was like, oh, my best day this month or best win I've ever had or whatever. Like I would forget about the dollar amount, go in and like just get super aggressive the next day, and then I would give 20, 30, 50% of that win back on potentially one trade, because you're overconfident. Like you think that somehow your prior trade has correlation to this next one, and it's a whole new trade. It's a whole new setup. And you're going in swinging when you don't really know what the outcome of this trade is going to be. The opposite side of that is when you lose 20 or 30% on a trade, all you can think about is that loss, right? And then now you got to climb back, and you got to make it back. And it's all you think about. So you project that loss on the next trade. So you might see, okay, well, I have an opportunity to make, 20% here. And, you portray that image on the chart and mentally what's not even there. So the best thing to do is just disconnect. And I mean, for me, I've been on both sides of it. I've made a lot and I've come back and I've lost, and I've given a lot of it back. And also on, when you win, I think it's best to just let it digest, like kind of come down for a little bit and then just ease back. And I think that's what, as I've gotten more experience in the last couple of years, I've learned. I mean, I took a month off. Honestly, I didn't work all of February. I just had a couple really big wins aside from GameStop. And I'm like, man, I just need to and it wasn't really my market. I mean, we've been straight up as I did like a scan. I didn't really see much opportunity for me. So I decided to take a step back and like let things, kind of digest. And, it wasn't until this last week and a half where I really started deploying some money again. And luckily, we got a dip and getting involved with some stuff. So yeah, I mean, that's my long answer to that.
Nice. No, I appreciate you saying that, because a lot of people listening to this are probably thinking that feeling they're getting as a newbie trader, that it's going to go away as you grow up, as you advance as a trader. And you just highlighted, I mean, it happens to everyone. Everyone goes through these kind of things, no matter where you're at in your career. And I just like that you said that. What do you normally do? You just take it off completely, always like that? Or is it like usually like a couple of days? Just curious.
Well, I day trade too. Okay. I always have swings on as I'm just referring to like initiating a new opportunity. So looking, as soon as I get rid of one swing, like jump back into the next one, like just kind of let it digest. like let the market do what it's going to do. And then if I have something, on my radar, I'll kind of watch it a little bit more closely, maybe get involved a little bit, but, just kind of ease back into it. But I've always have a few positions out, and I day trade, like I said, too, but the month of February, I just kind of took a step back and allowed myself some time to.
So let's take a step back real quick, and let's go back to the beginning of your journey. So that we kind of already hit the GameStop, because I know a lot of people are probably like, man, what did he do? So let us go back. Yeah. What got you started, and when did you start in trading? And let's go from there.
Yeah. So I started in about 2014. I was involved with a pharmaceutical company that offered an equity piece with some stock options. And that's actually how I found out about the market. I was in law school, dropped out, got a job, and it was like a startup. I was the first wave of 40 reps hired. We got a equity piece in the company. The company did really well. We had this equity piece that I didn't know about. And, a year into it, year and a half, the company had this big milestone. They crossed $1 billion market cap. And I'm like, what are we celebrating? What's going on here? And I'm like, well, your stock options. And, that's how I found out about it. And that's how I found out about the markets. So I'd made more money in stock than working for 2 years. So yeah, I quit my job and I started trading. That's how I got into the markets.
Damn, that's crazy. Okay. Yeah. So that was okay. And then, so you just jumped into the markets. How did you learn? What happened? You just jumped in. Did you do well the first year when you did that? How did it happen?
Man, it was brutal. I lost half my money in 6 months.
Oh,
yeah. Didn't have I quit my job. I just thought I was going to I was like, well, this is easy, I'll figure it out. And I had a decent chunk of money. I'm like, well, I pay my bills and use some money to trade. And that just went, I was losing every day, $2-3 grand every single day. I'm like, man, I couldn't make
trading big too as a new trader.
Yeah. Oh yeah. Well, I couldn't make $100, and every loss was 20 times that. So, I had to actually go back and I had to go back and get a job and trade part-time, because I ran out of money. I couldn't pay bills. I couldn't trade. So, I had to go back and work. And then I started, that's how I got introduced to swing trading. And I'm like, I can't watch these positions every day. So I had a sales job and I was out doing sales again. And then, managing my swings. And then slowly I transitioned out of the full-time job. And so back in 2016, I want to say, I had a big win, a swing, Jivo was the ticker way back. And, I swung it for 4 or 5X, and that was a huge win at the time. And I was like, all right, I'm ready again. So I quit, and I've been full-time ever since. So
really? Okay. Yeah. So how did you pick up swing trading then? I'm very curious, because I love what you said. You went through that time of, I know at the time price sucked, but you lost money and you had to go back to work, and then you figured out I could swing trade while I'm working. How did you just kind of teach yourself? Give me an idea of how that happened.
Yeah. I've been in Nate's room since I started, Investors Underground since 2014. But I think what helped me figure out the process was I was obsessed about where I went wrong. And I would start tracking things on a multiple time frame, 2 days, 3 days, a week, 2 weeks, 3 weeks. And before you know it, I had this inadvertently created this, and I still do it to this day. So I use PowerPoint and I use Camtasia to track my trades. And then I screenshot what I did intraday. And that way, I keep a virtual journal or a visual journal, for lack of a better word, for myself. But when I started, all I was doing was just looking at charts and then seeing okay, this move happened. What happened 4 or 5 days before? And then I would just try to dissect it backwards and see what caused the move. And then over time, I'm like, well, if I could have gotten in here, I could have sold into this move. So I was just creating this process, inadvertently. And I got to a swing trade. I'm like, you know what, I'll buy it and I'll hold it for a couple of days. Then it transferred into holding for a week or two. And then, as time goes on, you sprinkle in, you add more tools, you add more moving averages, things like that. So that's basically how I did. I tried to dissect why moves happened. And I just created this process for myself. But in my mind, I was always more focused on risk than the upside. How much was I willing to risk? because GameStop's a perfect example. Nobody knows where this thing's going to go. It could go up 50, 100, it could go up 20%. If I could manage my downside, that was key for me, because I'd lost so much money. You get burned. You're like, well, how do I protect the downside? How do I minimize my losses? So I figured, if I find a stock that's down 90% on a year, or 95%, like how much selling is there really left? So, over time that just, and like I said, inadvertently created this process for myself. And I've been doing the same ever since. As I've gotten, more experience, I've just added in every, you could be involved with the markets 30, 40, 50 years. You still can't say I've got it all figured out. Things change, fundamentals change, the way, this volatility is just, nobody can expect this. Nobody can plan on it. So I've just continued to add things to my toolbox and have just built my process from that.
And so what I like what you say is you kind of just reverse engineered, and you looked at moves, you wanted to see how it happened and try to figure out what made it happen and try to figure out where you can position yourself, which is nice. But a lot of people are going to hear one thing that you said and they're going to focus in on, oh, this guy just buys things that are just dying out. And that's what I need to do. So what are something someone needs to look out for? Because I know that's not what you're saying. I know you're specific on what you're looking for, but what's something to look out for a new trader who hears a swing trader who just buys things that are beaten down?
Yeah. So there's multiple indicators that I use. So I use the 200 a lot. That just gives me the big overall picture, 200's your year. So if I find something that's 50 or 100%, divergent from the 200, that I'm interested. I also use the 50-day moving average, and I use the 9 exponential. So the 9 exponential is your short-term indicator. So typically I like to see the 200, the 50 below the 200, and the 9, or potentially the 20. So stacked on one on top of the other. Once a shorter time frame or shorter indicator price reclaims that indicator, it typically starts to trend up. So those are things that I like to use more specifically to kind of give me a better idea of, are these dips going to hold? Is this trending upward, or is this just a quick short cover and a pop is going to fail and it's going to roll over again? So you want to see dips hold. Obviously, there's more to it, in detail. But again, there are things that you can use from a technical standpoint that'll help, kind of guide your trading, or, use as exit points. You could use the 100, the 50 or whatever, because typically if the 200's above the 50 and the price is below the 50, it'll trend back once it reclaims the 9 exponential. Just things that I've learned over the years. And then if the price is coming off lows and failing on the 50, well, shit, you probably should take profits there, so that, again, those are just more things in detail where I have kind of picked up on.
Now I appreciate you sharing that, but when it comes to holding a position, because you swing that's the majority of what you do, it sounds like. When it comes to holding a position, and let's say it seems like you do love indicators, and which is nice, because a lot of people ask me questions about that. I personally don't use them. So I want to ask you this, because I know people are going to ask this themselves, is let's say you're using an indicator, and are you ignoring support and resistance trend lines, or does that help or come in any kind of sort of play for you to
absolutely.
Determine risk and anything like that?
Well, of course. Well, if I had my ideal chart, it would be something that's washed out all of support on the way down, because when charts get messy, you've got a lot of support in between, and that support gets broken. And then it washes out. And then, it finds new support, comes back, whether that's short cover or not, it might roll over. And then, it breaks that support. So it creates a super messy chart, and you've got a lot of resistance on the way up. Yep. So I like something that washes out completely to all-time lows, sets a new base, and starts trending off that base. Because, it just makes, from my eyes, a much cleaner chart. So, to answer your question, yes, support and resistance is very easy to read. You just have to spend time reading charts. And, when you pair up with multiple timeframes, like the hourly, as a swing trader, with the weekly, and when these timeframes align, it makes for a much better move. But like I said, it's the indicators are there as a guide. They don't they're not like a foolproof system, where like, this is once it crosses here, then you should buy. Once it fails here, you should sell. It's not like that. I mean, I'm just saying as somebody that might just be taking on swing trading, use that as his initial guide, and it helps.
I love that you said that too, because it is a guide, and it's also clarifying that you need confluence, which is something that's so important. Like you use multiple things in your lineup,
right,
for it to be an ideal, position for you to,
right,
to take, which is interesting. And on top of that, I love that you even clarified like the stocks that just like kind of break, hold support, like they're going to be a little bit more, not clean in terms of so many areas where people can just, cover or
right,
sell
right,
or short or whatever it may be at that area.
right.
So you like a more clean chart, which is something that's interesting, because if you didn't pick that up when Paso was talking, you need to go rewind that and listen to that again, because he just dropped some really good knowledge on when it comes to swing trading. But I have a question for you though. Did you just, from my perspective, just talking to you right now, it kind of just sounds like it was pretty easy for you. So was there difficulty in you trying to figure out the swing game? And if there was, what was the most difficult part for you?
Man, I still to this day, I struggle taking profits on swings, and GME aside, it took me years to figure out, I was always good at timing the bottom because I tracked volume patterns and just different things. But I struggled so much selling on the way up and giving so much of that move back, and that's now I'm trained and GameStop, perfect example, like you get trained to sell, and to me, like I was trained to buy, and I would give, it would take me months, 2-3 months. Setup, the play was perfect, dips, add everything. And then as soon as it start to go, I just wouldn't take profits. And then something would happen and I would give 50% of my P&L back, or ride things down all the way back to flat, or even negative. Like I've been involved with swings where I've been up, 7 figures, and then I end up being down $500,000, so it's never a proven system. I mean, you can't be perfect in the markets. I failed so many times on hitting the sell button on the way up, because I was always so confident, and that's sometimes too much conviction in my trades, where I'm like, I know it's going to get here. And then, you don't want to sell. And then it comes back and you're like, well, shit, I just gave back half my P&L. I'm not going to sell. And I would add again, and then it creates this one bad decision just leads to more, and then if you're trading your P&L, like I always tell people not to do, it's like, all right, you missed a sell in the first run up, and then it washes out, and then you sell into the dip instead of adding, so one bad decision just creates this long, it was a long track of just like making more bad decisions. So it took me a long time to get there, but that's where I would say, as especially somebody new, use the indicators, because that's going to be your guide. If you're trading stuff off the bottom, like I do a lot of times, like the 200-day or the 50-day, you got a 30, 40, 50% reversion. If it goes into that, sell into it, where the hell are you going to make 20, 30% on the swing? That's nice. If you can repeat that 5 times a year, that's on a 20%, you just doubled your account, and I failed to execute myself, but I'm always looking for the bigger picture. And, as I'm doing more fundamental stuff too, I've made too many mistakes on just not selling, sometimes sizing in too soon, or, the list goes on. So by no means am I where I need to be. I'll probably never get there, but you learn on every single trade.
Yeah, no, I love that you said that too, because you're showing everyone that no matter what level you're at, you're constantly working on things. You're constantly trying to get better. There's always new challenges, maybe at a different caliber, right? Like if you're trading $100 per, $100 risk versus, 100,000 risk, the caliber, it might be the same issues you're dealing with, but times 100,000, it's just a little bit more.
Yeah. The zero's a little bigger.
Yeah. So it's just like a lot more pressure. So I get that. And that's probably why you reference, don't look at your P&L, because you mentioned that you did that in GameStop and it kind of got in your head where you're just like, I'm not going to give this back. Why or what made you come to that conclusion? Don't look at your P&L. Like, where did that come from? And why is that a rule for you?
Because I've made so many mistakes on, you see, okay, like I'm up 100 grand, like, and you stop looking at the chart and then it dips, and now you're up 70 or 60. And then now you're like, okay, it changes your decision making when you're looking at the P&L, because if you're up 100K, just use even numbers, and all of a sudden you're down, 40%. So now you're up 60. You don't see it as being up 60K. You see it as you just lost 40 grand. So mentally, you are now approaching the trade from a totally different perspective, and that's where I try to avoid, especially, when I'm day trading, just don't look at the P&L because it moves so fast, and like I said, man, that once you start going down, like once the P&L starts trending down, you don't trade the same, so that, again, I know, like I could, it's like beating a dead horse. You can say it 100 times, but I still struggle with it. I just did it not too long ago, but yeah.
Yeah. You also said something about it's one mistake that leads into multiple. And I want you to elaborate on that, because I agree with you. First off, on everything you said, especially on P&L, I don't look at P&L at all. And same thing when I do, though, occasionally, because I'm human, like occasionally I do. I'm telling you, when I do, I'm not even me anymore. I'm like, I'll just make all the mistakes in the world. So I know what you mean. And some people can look at it all day and trade. I just can't. And it seems like you're similar like me. Let me ask you this then. Can you explain a little bit more? And I would like you to explain this on how one bad mistake can lead to other mistakes. And you mentioned how instead of adding on dips, you're selling on dips and vice versa.
Well, it just goes back to the point of, you're giving back money, so you're not thinking clearly anymore. You're not looking at the chart. You're looking at the P&L, and all of a sudden you want to get out and you want to salvage whatever's left, of that P&L, and you could get taken out, or, if the dip's too big, instead of buying in the washouts, you're just selling into it, because, the next big washout that comes, because after the first big one, that's probably most likely going to fail. And then that next one, you're digging deeper in your P&L, and you just, again, it's bad decision making, but strictly seeing that number, and that's why, like, especially day trading, man, it's best just not to look and just focus on. That's why I love Dash Trader, and
yes.
You could see like where you bought, you can see where you sold, and in intraday. So I trade like week opens, or I trade like stuff that gaps down. Like I'll set my my trend lines, the resistance points. Like I'll scroll back, even if it takes like 10, 15 days, like, because in Dash you can scroll back like I think a month, and I'll draw my lines and I'll just trade with my support and resistance, and if it gets there, I know I'm selling into it. If it fails, I'm moving out of it. But man, that's messed me up so many times. But regardless, what your P&L is, because if you're familiar with your size and what you're doing, it's like it's kind of hard to ignore, but you just got to fight that urge.
Yeah, you really do, because you'll just become a whole different trader, and you'll just be scared. I love what you said, because it positions you, instead of seeing that you're up 60 grand, like you said earlier, you feel like you're down 40, which is just, it's beautifully put. It's 100% true. And you're really up at the end of the day. Like you're really up.
Yeah.
You bought down there, buddy. So, what is something that, before we start to wrap this up, because we're getting close on time, but I want to ask you a couple more things. And that is, what's something that you wish someone would have told you when you first started, so that way you didn't lose that, you lost in the first 6 months, like half of that big gain that you got from the company. So what do you wish you would have learned, or someone would have told you, so that way that wouldn't have happened?
Man, I'm gonna hit the cliche here. I have to. So one thing I wish I didn't do was just be solely focused on the money, because that's all I cared about when I when I started. That messed me up more than anything. I went in and I was like, I made this X amount of money, which I really didn't. It was the options were granted to me. I didn't trade it. And so I didn't know what I was doing, but I went in and, I was like, I want to make whatever back then, like $500, or, my ultimate goal was like, just make $1,000 a day. And I had this like whiteboard, which I still do. Like I write everything down. I was like, I want to make $1,000 a day. How? You know, it's like you put this predetermined expectation on a totally arbitrary set of rules, and you expect to come out and make money every single day. You know, and at the time, I wasn't worried about, like, it wasn't even focused on the how. It was like the end result. Like, I just want to get here. And I never spent the quality time on that first go at it, figuring out how do I actually trade. I remember my first trade, I was like a deer in headlights. I didn't even think I knew like which side of the level 2 I was executing on, you know, but all I was focused on was like, hey, this guy made X amount, like this guy made this. You see it all the time, you know, and instead of focusing on what am I doing? How do I place a trade? I was doing the exact opposite, you know, as I do now. It's like things run up, you buy, and it slams, then I sell. I mean, that's just how it was. And I did it time and time again. And I was so focused on the money. I was so focused on the end result. And, you know, me having to go back to get a real job, you know, it was like, okay, well, this clearly didn't work, but I obviously I didn't walk away from it. I just had to change my approach. Yep. And then I came back, and then I was just obsessed about how do I figure out this process? How do I cultivate my own process? Because whether, you know, you're in a room or, you know, you're getting some newsletter alert or you're subscribed to some, you know, whatever people are doing nowadays, at the end of the day, you're not going to have conviction to hold. Yep. You know, just because somebody's telling you, hey, like this is a good play. So you have to have your own process. And I understand building a baseline and understanding technicals and learning that stuff, but without your own conviction and without your own process, your own tweaks, yep, you're never going to make it, because following somebody else's rules, or, you know, we can't trade the same, because I trade with a much bigger range. I trade totally different things. Somebody can't just jump in and follow what I do. Somebody can follow and jump in what you do. You know, everybody has to have their own approach. Unless you tweak it and you start building that over time, man, that'll cultivate the long run. And I'm telling you, like, guys that come in and think they're going to make money in 6 months to a year. I mean, if you do, you're getting pretty lucky, like people jumping into markets in the last couple of months, and that shit's not going to last. You know, it took me a good couple of years to really have a little bit of consistency. But once I figured out, hey, like I'm making progress, like I just slowly built up on it, and it comes, man. I mean, I've seen so many examples of it, and like this definitely is, you know, far from like the get rich quick, because, you know, if you make it quick, you're going to lose it quick too in the markets. And that's all I'm going to say. I know it's the biggest cliche, but I
love it. I love it because you hit so many good things. You hit number one, like don't focus on the money, because I'll Be the Trader. We're all about process over profit, just process. It's all that matters. Executing well. When you execute well, Paso, you do well. That's at the end of the day. Number two, you also mentioned that if you're in a room, however you learn your baseline, that's cool. But at the same time, like you're not ever going to have the conviction to actually be in a trade that someone else tells you about, or that you hear from someone else. And you won't, and you won't have confidence you might get shaken out. You might take a little gains. By the end of the day, you're not going to be self-sufficient, right? You're not going to be able to do it on your own. And I love what you said. You compared us, like, you know, I couldn't trade like you couldn't trade like me. It's because at the end of the day, we all trade, dude. At the end of the day, we all trade different. Like we all trade different. And that's what I want everyone to listen to. Like we all trade different. We've had hundreds of people on the show now, or I don't know if it's hundreds, but tons of traders on the show, and every single one trades completely different from the other. And we could trade the same ticker. I'm sure we've traded the same tickers, and I'm sure we've taken two different positions, and I'm sure that we both were right in our time frame. You know what I'm saying? Like it happens all the time, and that is something that you highlighted very good, and I appreciate you saying that. Is there any book that you have ever, if you haven't read any books about trading, that's cool. But if there's any book, regardless if it's trading related or not, that's something that helped you through this journey, could you let the audience know like what book that may have been, if there was one?
You know, I'm like the most dyslexic person ever. Like I didn't find this out until law school, and I'm like, man, I can't read. Like these words are like jumble, you know, but I'm a very visual person. I'm good at math, but I will say, like, you know, the charting, like journaling your trades, not just writing them down, but, you know, taking screenshots. Camtasia is a great tool. You can record your trades. And if you, I mean, it's like game film, you know, like you want to be good, you know, record your plays and rewatch it on the weekends. And like, I make notes, man, I still do to this day. And, you know, I'm 7 years in, you know, I still track my stuff, you know, because I'm trying to still like keep my edge, you know, so that's the best tool that you got. I mean, with this technology now, like you got everything at your fingertips. You just need you and trade and screen time.
Dude, amen, brother. You know, I actually shared this on my solo episode. I record my screen. I used to do it every day by myself, for myself. And I would rewatch it just like games. You know, you rewatch the tape and you could see how you trade it from a different perspective. And you can really see things that you couldn't see when you're in the moment. Did you record your trades for swing trading too that way? Or,
no.
Okay,
just
okay,
day trades.
okay,
Just
cool.
day trades.
That makes sense because I do it for day trading. Man, you just dropped some cool stuff, man. And it's called Camtasia is what you use, right?
Camtasia, yeah.
Okay, and that's a recording software, I'm guessing.
It's just a recording software, yeah.
Okay, then if anyone's listening, it's called Camtasia, and also I use OBS. You can, and then Windows has its own Windows recorder. You could also use. You can use anything. Just you want to watch. And if I don't know if you did this, Paso, but I recorded my thoughts out loud for myself. So while I was in the trade, to say I'm nervous right now because I was in a different state. I don't know when you did it. I did it to find consistency. It helped me. And I was like, man, I'm nervous right now, and I would pick up on things that I would say before I lose,
right?
Before I made a wrong decision. And I was like, after I watched, you know, I recorded 3 or 4 months straight, and I would watch them all. I don't do it now, to be honest. But I would be like, yo, when I say these things, I need to be aware.
Yeah.
That's cool. Did anything stick out like that for you?
I'll drop a little like nugget here. So something Nate showed me was doing the time and sales, doing 2 different ones. So one you do, and I've done this before where like I'll place, you know, names are very liquid, you know, a couple million shares and up, you know, you see a lot of these prints go through. So I used to set them just above to show prints above 1,000. So now I have 2 time and sale sheets, one that shows all of them and the other one that shows just 1,000 and above. And if you record and if you watch your trades back again, see where things break down and see where things break out, and watch what happens with level 2, because you'll see that shift over time. You know, with screen time, you get to learn, you know, and it becomes very natural, like an instinct. You see it and then, you know, you press it. But if you get to go back and see it again, watch when things break out or watch when things break down, and go back and review that film, and you'll start to pick up on things. So just one little piece of,
I love it. Thank you so much, man.
Man.
You know, you're ending this on a good note, and I appreciate you so much. Let me ask you this. Where can people find you if they ever want to reach out or just see where you're at? What's the best way to
I'm on Twitter, PMilly90, PMilly 90, PMilly.
Perfect. Well, PMilly, Paso, thank you for being here, man. Thank you for dropping some great knowledge. And man, it's been fun, dude. And you know what's crazy is we're both from Dallas, which is freaking crazy. It's just wild. So
recent apocalypse.
Yeah. DFW in the house. So I know we'll connect sometime in the future, and I know we'll bring you back on the show, man, because this is a good time, man. So I appreciate it.
Yeah, thank you.